In today, out, tomorrow. It's called overnight ownership. Simple and easy to use. There are 8 steps in total. The first step is to screen for increases. At 2:30 in the afternoon, open the trading software, check the increase chart. Add all stocks that have risen between 3% and 5% to the optional. The increase in this time period can better reflect the strength and weakness of the stock's performance that day. If the market is bad or better, the range of increase can be appropriately relaxed, but no more than 5%. Because the increase is too high, the price-performance ratio will be relatively low. The second step is to screen the quantity ratio. Rank the stocks that have joined the self-selection by volume. Exclude stocks with a ratio of less than 1. If the volume ratio is less than 1, it means that the trading volume will shrink. Stock activity is low. The probability of rising the next day will also be relatively low. The third step is to screen the turnover rate. The remaining shares are screened for turnover. Delete stocks with turnover below 5% or above 10%. Stocks with a turnover of less than 5% have less attention. Stocks above 10% are overactive. Too high or too low turnover is not conducive to operation. Therefore, choose moderate stocks. The fourth step is to screen the circulating market value. After the first 3 steps of screening, the rest of the stock is relatively high quality. Next, it is further screened by the circulating market value. Exclude stocks with a circulating market value of more than 20 billion or less than 5 billion. Stocks with a market capitalization of less than 5 billion are usually unpopular stocks. And the stock played above 20 billion is larger. Pull-up requires more capital. It is not conducive to short-term quick profits. The fifth step is to screen the transaction volume after the previous 4 steps of screening. There are not many stocks left. Look at the K-line charts of these stocks in turn. Keep stocks that continue to grow in volume. In particular, stocks that exhibit a step-up channel. Exclude stocks with irregular trading volume, high and low. The 6th step of the ticket, screening the K-line form. Check whether the moving average is in a bullish upward divergence pattern. This is the most ideal form. If the K-line is below the important moving average, it shows that the recent trend has risen and fallen. The pressure of the upper set plate is high in a transaction-intensive area. This stock should be excluded. Focus only on stocks that are stress-free above the K-line to ensure that there is a higher probability of rising the next day. Step 7. Filter the timesharing chart. Judging the strength characteristics of stocks through timesharing charts. The share price must be above the timesharing average throughout the day and stronger than the timeshare chart of the broader market of the day. Stocks that can outperform the broader market are rising against the trend. Only by choosing such a strong stock to maximize profits, the increase will also be better in a good market atmosphere. The next day will be even more intense. Step 8. Screening the average price line. After screening through the previous 7 steps, the remaining targets are very strong. It's good quality according to the market opportunity, and sometimes you can't get any of them. This is normal. Be patient. Opportunities are always reserved for those who are well prepared. For the remaining shares, if its price hits a new high for the day around 2:30 p.m., then step back on the time-sharing average price line without breaking. This is a good entry opportunity at the end of the session.